Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 17th. Mike Boutros with you on the horn. Hey, Jay, everyone in the room, good morning to you as well. We've got some interesting price action, right? The dollars continue to hold ground, specifically versus the majors. You do have losses for the dollar in Swissy and in yen. We'll go over those pairs, but the extension has taken us into some nice levels. So on the menu for today, we'll start off with DXY, Euro, Aussie, Dollar CAD, Dollar Yen, Gold, Sterling, Crude. We'll take a look at what the 10-year is doing, and a quick reference if anyone here has any interest on Swissy. I'm not really trading it, but we are making a quite precipitous drop here. All right, as always, questions, trade setups, feel free to throw them on the message board at any time. We did just get the release of US retail sales coming in weaker than expected, negative 1.1% for the month of July. That's month on month. The expectation was for print of negative 0.3, so a little bit larger of a contraction than expected. Upward revision to the previous month, but I don't think that's likely to quell any concerns at this point. So here's where we are on the dollar. All right, on the 15th, we had seen that initial turn, right, last week, right ahead of the high day close, plummeted, and we were opening the week over the 50% retracement. The big zone here is just a little lower at the July open, and that's like 92.34. So not quite there yet, but at least the intraday chart has shown that initial drop last week. Into the open of this week, we were looking for, if this rallies, exhaustion into the high day close. So we've now rallied. Here's what the intraday chart looks like. Pretty close to the 38.2. Here's the intraday chart now. Here's what it looked like again earlier in the week into the Sunday open. That 50% held, and the rally's now testing. We didn't know that was a low, so the new retracement takes you to the 38.2 here. Basic slope resistance just higher. Bearish invalidation, as I said on Sunday here, is going to be 92.92, 92.90. Okay, if we get through the monthly high day close, if we complete a 618 extension, retracement rather, of this decline, that would have me inclined to think we're looking for resumption. Remember, on the broader dollar trade, here's the DXY in the weekly chart. Nothing has changed. Iman, good to see you as well. How are you? Hope all is perfect. Great to see you, Iman. Always a pleasure. All is well on my end. But certainly for the dollar, 93 is still the hurdle to clear on a weekly close basis. And until we get that weekly close, guys, it's strong resistance. So we are getting some plays though. So again, let me take you to the daily chart real quick. Here's the rebound. Again, monthly high day close gives you 92.89. Looking for inflection, a breach above that to mark resumption. So while we are looking a little bit higher in the near term, that's really the focus on the DXY today. Questions? FOMC minutes come out tomorrow. Not expecting much out of that. Heading into the end of the week, you do get, that's pretty much it for this week. So not looking for much US data. Now, obviously, there's a lot of questions with the geopolitical stuff. I'm not going to touch that. You know, that's something that's going to filter into the markets eventually. I don't see a necessarily play that we should be planning for that, but interesting to see how this pans out. So dollar holding firm footing, still looking pretty good. So where does that put us on the euro? Before I jump into the euro real quick, we'll make that number 3. Number 2, let's take a look real quick at the 10-year. So I've been showing you this, guys, this chart for a while, right? Really nice turn from resistance last week. That was a 38.2 from the drop off the yearly high. Perfect touch of 37.55, 2 consecutive days, and then we turned lower. This is big support. This is the 618 of the drop in yields. It's also the monthly open in yields. Also possibly former channel resistance, now support. So I'm looking for an inflection here. Okay, at the end of the day, if we drop 22.20, it's likely to be a pretty precipitous drop again. The low day close comes in right here at like 118.70, but essentially, you know, you're risking a larger decline. So we're looking for inflection here. Could get a little bit of a rebound, a little bit of a quieting of the concerns we've gotten so far in the markets, but certainly yields are at support. That would put Treasury prices at resistance. Questions? So with this in mind, right, that you see the dollar is actually finding firm footing on a falling rate. Again, it brings into question what sentiment is doing. Is sentiment really as strong as everyone thinks it is? Here's what euro looks like into the start of the week, or midweek, I should say, Tuesday. Here's euro on the weekly chart. So the major support level we talked about last week was 16.94. We turned right ahead of that and we closed back above the low day close for the year, the low week close for the year. And that looks like this. This is the first attempt. Again, intra-week doesn't matter. We need the weekly close below 1760 to keep the downside in focus, looking for 1695 and inevitably 1620. It's a huge, huge region. That's two equal legs off the high. So again, with euro probing a break of support, what's it look like on the daily chart? Here's euro dollar from the daily perspective. You had that multi-day decline right into the 2021 objective low and a 38.2 from the advance off the 2020 lows. So objective stuff here. Downslope support, the low for the year, the 38.2 really puts a cap, critical support on that for euro. If we break below here, likely to see a precipitous drop. But if you're holding shorts, that's really the hurdle that euro needs to get through. So from the intraday, look, I don't have any positioning on this, just as a disclaimer here, but it was a pretty decent entry, even if you got it into the open of the week, right? We opened the week just below the 1618 extension off the low, just below the 50 off the high. Here's the pullback. Here's the first area of support that we had highlighted back on Sunday. Okay, so it was the low week close at 1760. Once this peak pulled back, the retracement also provided the 50% retracement right there. And that's basically what we're testing right now. 618, just lower. Watch for this. If this inflection buckles right here at that 618, again, 1730, 17 handles huge. But these are the two levels right now that are sort of the thorn in the side for the euro bears. Really need to get through 1740 to get this thing going. So wouldn't go chasing here. If you're holding shorts, bring down your stops. Maybe take a little off here at 1755 if it doesn't break into the open here. But certainly at this point, we're looking for inflections like 1740. If this is going to break and it's going to go, that break should give us the charge down towards 17. Till that happens, use caution here into 1740 on the short side for euro. Questions on euro dollar? You got GDP coming out today, quarter on quarter, came in exactly in line with 2% for the second quarter. Year-on-year rate came in at 13.6 versus 13.7, so pretty in line with expectations on the data front. All right, that is euro. Number 4 is Aussie dollar. So Aussie's making the break, guys. It looks like it wants to make a break. I'll recall, again, Aussie from the weekly charts at absolutely critical support. We've been talking about this for 5 weeks now. 73.28 is going to be the swing low that you made in May of 2017. Really nice pivot action. Downslope support. It's all right here. Now, while we've broken the lateral level so far intra-week, note that this slope is still right here. We're looking for reaction today. If this breaks, again, from the weekly perspective, there's nothing until 71.20s. That's a 1618 extension off the high. But this is critical. This is critical. Aussie on the daily chart looks like this. Okay. Again, there's the same slope that we're eyeing on the weekly chart. You can see the lower parallel breaks. Here's the sliding parallel, right? This is the same slope extended off the low from February. Touched again here. Basically gives you near term like 72.50, and 72 is going to be a 786 retracement. So you have your two levels on the immediate front. Again, if this breaks, generally speaking, it should be a pretty quick drop. This is pretty big support, major inflection in price. But just use some caution. If you're holding shorts here, again, from my standpoint, I can't tell you guys exactly what to do, but my humble opinion, I would just be taking a little off as this declines. The drop could accelerate if we buckle below this region. Here's what it looks like on the intraday chart. Here's a 2-hour. So start of the week, we were talking about the August open. We were talking about this big support. Here's the start of the week. We dropped right into it. Pitiful bounce. Here's the break. At all things held constant, forget the weekly charts or the daily charts, all things held constant, we're bearish below 73.28. if this rallies from here, you'd want to see any type of stretch limit right there, and then the next leg lower. Anything above 73.28, guys, intraday, I don't want to be on the short side of this anymore. So it's a very, very critical level. And again, don't take my word for anything. You've seen the inflection that we've gotten along this zone. So this is a new low. If it continues, the US Open materializes 9:30, you're heading at 10 o'clock, you see a drive lower, I think you're on pace for 72 20s. I think you're on pace for 72. I mean, it's 786 retracement, but it all depends on how we close today with respect to 73.28. Questions? Recall, guys, again, just in case you don't remember, 73.28, aside from it being that swing low from May of from a couple years back, it's the objective monthly open. And outside of today, we haven't made a single daily close below. So objectivity, every time we get turned around or we get, I don't know if I'm chasing here, let's just take a step back. Multi-week range, almost a full month. Multiple tests of the low, multiple tests of the high, excuse me. That's the break. Objectively, the risk is still lower. Jay says, very narrow view, but 100% extension from the August high week close working. From the August, what time frame are you talking about there, Jay? Real near term? On the 4 hour. Let's see what you got. So 100% extension from the August high. Got you. Okay, not the high week close. I got you. So you're talking about this. So there would be some merit to this. I wouldn't argue it. The reason there is merit to something like this is because that was the high, right? So if we look at it from an Elliott wave standpoint, that's going to be your first wave structure. Here's your next wave structure. So yeah, I would grant merit to that 1, 2, 3. That being said, it's a near-term level. It's a near-term level, Jay, just from the decline off this year's high. In August, high we closed last year. So the August high week close, this is the high day close. Let me get you the August high week close. Does give you support here. Nice, Jay. Nice eye, brother. Nice eye. I like that. So it gives you a little bit more detail on the intraday, Jay. I agree with you. From a weekly standpoint, though, Jay, I'm still going to require that 73.28 to be the level. You know, even the instances that you saw 73.28 break were mostly gaps. You know, excuse me, this one August from last year, but even this pivot here, this was a gap higher before it ran lower. So in fact, if you look at this on a line chart, it won't even show that it broke, you know? So the inflection, the severity of the inflection we've seen here is pretty important. That's pretty much the only spike close that you got. So nice level. I do like that you eyed that out. I'm going to keep that on there, 72.81. But certainly at this point, we are basically tempting a major breakdown in Aussie. A major breakdown in Aussie. It's right there. Not bad. Well done, Jay. Either way, rallies should be capped by 73.28 intraday. Downside break keeps us looking for 72. Australian employment data on tap tomorrow night in New York, Thursday morning in Australia. Keep that in mind. Expecting to be a pretty dire read, actually. Contraction of 42,000 jobs for the month of July, with unemployment rising to 5%. So we'll see if that can offer a little catalyst here on the Aussie trade. All right, that's number 4. Any questions on that? All right, number 5, here's Looney. So what a beautiful trade. This one worked out real well, guys. The advance is now at resistance. Oh, we're actually pulling back. I was looking at this right before the webinar. The 50% retracement was 26.15. We had eyed that on trend or on slope a little bit later here today, but obviously the strike higher, besting that 50% retracement. Could see some exhaustion here. Would love to see support along the median line. Key resistance is still 26.60. Quick reminder of where we are in dollar CAD from the weekly standpoint. Here's what the weekly chart looks like, guys. This is still major resistance into 26.34. Remember, that's where we maxed out. This zone right here was support, and the yearly sort of range lows that we made into March before we broke, resistance, 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 pummeled into the 2017 low. Here's the rally. This is still resistance. Intra-week, it did pop up this high. But on a weekly close basis, that resistance level, again, has been absolutely paramount. Objectivity, guys. We take things back just to the objective levels. Forget any of the nonsense, right? You got slope resistance off the highs. You got former slope support off the lows. You got the 52-week moving average, right? You've got the median line for the current operative pitchfork we've been in from the highs of 2017 and 2020, all right here. That 52-week moving average just higher near 26.90. So I loved the upside, but we're coming in some big levels here. So you got to start being prepared. 26.34 resistance, and again, that 26.90 level, that 52-week moving average, has been pretty decent inflection, right? Here's what it looks like on the daily chart. 2-day rally takes you right back into the 50% retracement from the drop off the July high. Objectively, this could be interpreted as a breach of the monthly opening range if we close here. But again, my concern is the severity of the levels just higher. The 618's at 2660 on the weekly chart. Again, we said at 2680 is that 52-week moving average. So you're running into trouble here, okay? And we really would need essentially like a breakout above the yearly open to validate sort of resumption of the broader uptrend. But very similar scenario to some of the trades that we're seeing, guys. If you're holding longs on this, again, I'm bringing up my stops. Maybe take a snip off here at 26.15. Next level, 26.60, I would take another half off, if not more. And we'll see if the rest plays, but certainly this is your first level of resistance. Weekly resistance, just higher at 26.34. Intraday looks like this. So even within the confines of this advance, Aussie levels remain unchanged. That's from Sunday's open. Here's the last CAD update from last night. So the levels remain unchanged. This is the first level. This is the breakout zone. We're at the first level here. Could get some kickback. Like I said, if we do, last week's high converges like on slope, just a little bit lower. So like 25.90. I want to see the pullback sort of exhaust there. That's really key resistance. My favorite Fibonacci confluences, I tell you about these whenever I find them. 618 off the high, 100% extension off the low. My favorite Fibonacci confluences tend to give us the best inflection range. That's 26.56 into 26.60. Questions on Loonie? Core inflation data on tap tomorrow from Canada, expecting a read of 0.7%, slight downtick from the 0.9 we got previously. Headline inflation, though, is expected to rise to 3.4%. So the inflation read is going to continue to sort of loom here. Oh, excuse me, guys, that's Eurozone inflation tomorrow as well, not just core inflation from Canada. Core inflation from Eurozone is expected at 0.7%. Canada is at 2.7%. So we'll see how that pans out tomorrow morning. Okay. Next up, dollar yen. So here's what the abomination is doing. This thing is gonna rip up people today, I'm sure. So look, last week it was a big reversal candle. We closed for the first time since June. We closed a weekly close below the 2019 open, which has been a very decent pivot in price. Again, just look to the left, right? So last week, like I said, was the first close below. Technically, again, that would keep us looking lower. Slope support converges on the monthly low, basically, right here at 108.72. What the heck is that? Here's dollar yen on the daily chart. Again, the slope that we've been following all year long, which seemed like it broke back here. We posted a massive outside day reversal higher, shifted our focus higher. Again, into the 618, massive failure there, turned us back below, and we were looking for inflection here. Yesterday, we got the break in acceleration. If this is legit, 106, 109.67 should be resistance. What's 109.67? Well, I don't know why my monthly marker is not there, but it's the monthly open. It's the 2019 open. It's the 100-day moving average. And it all coincides right there. 618 retracement of the advance gives you this little zone below 109.51 to 109.65. I want to see inflection here today. If that holds, 108.62, and we're off into 107s. But this needs to hold right now. If this closes back above 109.65, guys, just forget it. 109.67, just forget it. I'm not going to be wanting to get involved in this at all. But if this break is legit, like this needs to hold resistance on any recoveries intraday. Here's what the scalp looks like. It's not the most popular thing. It doesn't look the cleanest, but I'll show it to you. This is the pitchfork that we've been following. And this is why into the start of the week, our focus was like, look for a reaction here. You got slope support here. You got that key inflection zone with the June low and the 618. If this breaks, likely to be a precipitous drop, but this is support. So not too surprised to see this rally. I'm surprised to see the extent of the rally. But on this recovery, weekly open resistance, 109.59. Again, 109.68 to 2019 open. You'd need a breach above 109.96 to mark resumption. But at the end of the day, if we break the weekly high, I wouldn't want to be holding any shorts here on dollar yen. So if you took that long that we were talking about into, I guess this was yesterday's update, if you were look at that support and you're in it, 2 levels, okay? Start to wrap things up. The risk is still lower below 109.86, but certainly this is big support. So I'm not surprised to see this kind of bounce off it. Just think that this teeters out ahead of that upper parallel. So interestingly enough, guys, the dollar has actually been holding its ground versus most of its major counterparts, except the yen. Today, it's taking some back. The other trade that took some against the dollar and hasn't given quite as much back yet is Swissy. Swissy has been sort of a one straight shot since we opened the week. So here's what it looks like. Friday's sell-off just turned, not even from a technically significant level by my humble opinion, but certainly turned lower, and we're kind of in no man's land here. I need to clean up these charts. I just did want to show you the extent of the drop. If we clean this up and we kind of scratch this slope, I was looking for resistance to the weekly open, but if we scratch that, here's sort of what I'm working with now. All right, so you're getting divergence into the low. If it pops the weekly open, I think you're on the resumptive trail again, but I'm taking a neutral stance here on dollar Swiss. It's one of the pairs that have held, have pushed against the dollar despite dollar strength. Again, the index higher on the week, right? Swissy just now making a little bit of a run, but largely still trading lower on the week. So again, we'll be paying attention to see if this bottoms out here at the 618, but certainly a nice level to keep in mind. That's dollar Swiss. A quick note on that. So that's 6 and 7. Man, have you still been trading gold? Because man, it is a clean trade here. Here's the weekly charts. This thing just brings a smile to my face because it's been a stellar trade. I love how it's reacting. I think you need to be cautious here, but we'll take a step through it. Here's what it looks like from the weekly charts. We talked about this yesterday. Big, massive support at 1670, 1682. Wonderful rebound there. Closed higher on the week last week. And we've been looking for that to kind of extend. From the weekly standpoint, there's nothing here if you haven't gotten in already because you're mid-range, right? Resistance up at 1825, support's down at 1750. You're right in the middle. So if you're looking for new exposure, now unfortunately is not the best time to get in, but the levels are super clear. Here's gold on the daily charts. Big resistance 1795 into 1799. What is that? Well, it's the objective 2012 swing high. Not Mike Boutros' opinion, not SB's opinion, fact, right? It's the 786 retracement of the monthly range. Again, not Mike Boutros' opinion, not SB's opinion, fact. Former slope support. This is a sliding parallel of the same pitchfork, extended off the low from March, touched again in June, now resistance. It's all right here. Could we get some kickback in gold? Sure. Still think you're constructive above 1760. Next upside targets, you got 1806, 52, or excuse me, 100-day moving average, and then the monthly open gives you 1814. Here's gold on the intraday. And was our last update on gold here on SB. Okay, so start off the week within the confines of this ascending formation. We were looking for confluence resistance today at 1795, 1799. The high so far registered right into 1795, literally to the pip. Outside reversal candle here on the 2-hour. Haven't posted it on the 4-hour yet, but certainly it's a risk. Divergence into the high certainly further highlights the risk. So look, near-term support at the slope. The weekly open, let me just put that there for you. The weekly open, just a little tidbit. This was what I was looking at yesterday. I'm not sure why it's here. The weekly open comes in near 1780, and that's basically where slope is now. Okay, so on a pullback, I'd love to see support here. If it breaks, you got the weekly opening range low, but that's really your pivot. Anything sub 1760, which is the low day close that we made back here in June. You can see pivots on both sides of that. Look to the left and to the right, right? Nice pivot action there. Break, acceleration, break, acceleration. It's a pivot I want to pay attention to because it converges on slope. So 1760 is really the max drawdown I want to see on a gold pullback if this is heading higher. Northbound of 18. Watch out for that 100-day moving average, just a soft target. I'd have it 1806, really the monthly open, and then this is your big zone. July high day close, the 618 of the drop from the month for the yearly high in June. Okay, or excuse me, the June high, not the yearly high. It gives you this range between 1825 and 1830. That's key resistance, key resistance. All right, so near term could get a little bit of a pullback. Eman saying I'm long since 1723. Well done. God bless. That's awesome. Love hearing that. Yeah, this is your first area of which it's sort of a major pivot. Okay, so just if you get some pullback here, 1760, that's where I want to see the max drawdown. On the upside, 1806, 1814, and 1830. Questions on gold? Silver price action, I know that's been a very popular trade. I've been getting a lot of questions on. I don't see quite the same conviction on the silver setup. The weekly chart looks good. Intraday, not so good. Here's the weekly. So it looks like we broke the yearly low there. Objective move bottomed out right at the 100 extension. So 2 equal legs off the yearly high was 22.43. I mean, we bottomed right below that. And here's the rebound. Not as reassuring as gold, in my opinion. Okay, here's the near-term chart. I was trying to identify a decent slope for you guys. Something like this, you know, it looks appealing. I'm not, you know, super confident about it, but something to possibly consider. Something to possibly consider. You know what I mean? And then that puts weekly open basically where we are right now at 2371. So it's different. It's quite tighter than gold is. They both came off of massive critical support last week. But the rebound in gold, much more welcoming, much more inviting than the rebound we're seeing in silver. And again, this puts the threat of those non-confirmation turns and puts me on edge a little bit. So I am paying attention to silver, not really getting involved. I think gold is at resistance. So if there's going to be a pullback in gold, wouldn't be too surprised to see it here in silver as well. Okay, so just a little tidbit there. Questions on the metals? A little out of order here, but I'm going to segue back to sterling. I don't know how many of you are trading sterling. I haven't really been super excited about it because last week was like, man, it was super boring. And then it went all the way lower, tested the range lows, and took it all back right into close the week. So last week was like pitiful, right? Here's the weekly chart for sterling. Almost a doji last week. So look, this one still has me real skeeted out. I don't like it. You know, at the end of the day, if you put a shotgun to my head, I would still say you're looking lower towards 36.75. But I would have liked a deeper extension into the parallel, if not an actual tag of that 618 before a pullback. Look, maybe I'm capitulating, but at the end of the day, the weekly chart just isn't appetizing. Momentum's at 48, guys, like on a weekly standpoint. That's basically zero Momo, right? So hopefully we get a crack here. Unfortunately, again, there's not much data on tap from the UK. I mean, I guess into tomorrow you get core inflation data, which might be a kick. But let me take you real quick. Sterling on the sterling on the daily charts. The monthly opening range was pitiful. Here was your monthly open. You set a high, and we've just been dribbling lower. You know what I mean? It's not really the most exciting trade. At the end of the day, key support 37.42 into 37.28. That's a 618 of the rally from the July low. And then it's going to be the objective low day close back here for April. You saw that it was like the opening range basically for July before it buckled below, buckled back above. That converges 37.28, 37.42 as support for sterling. Monthly open resistance 38.90. So here's what it looks like on the intraday. Let me zoom this out to the 4 hour just to give you some clarity. So there's that pitchfork that we've been following off the highs. Didn't quite get into the 618, didn't quite get into the upper parallel. We sat in this channel, right? Now remember, a break lower of a descending channel formation can typically be the sharpest part of the decline. So I'm not trying to get cute here and call low. I'm not trying to jump on a short either because your stop is way off now. All right, it's a 100 pip stop. I'm not getting a 100 pip stop. Next level to look for on the downside is 37.28. Look for a reaction there. Bullish invalidation. I mean, anything below 2021 open basically puts you back on resumption. So the risk is lower, but not too much lower. Looking for reaction near 37.28 if we get it here on the British pound. Core inflation data on tap tomorrow morning. Questions on British pound? Okay, crude. What is crude doing? I wanted to give an update on this last night, but I didn't get a chance to do it for you guys. So our last update on crude looked like this. We were basically looking at this thing. Oh, so the British pound, guys, no levels changed there. We've simply broken this low. It's that 618. That's really the focus. The last update on crude, I believe, was back here on the 11th. And we were looking at this thing really rebounding off this key support zone. So levels of interest that we've been talking about for crude were 65.43, which is the 1618. And then this key zone here at 66.15, 66.57, okay? We were looking at that into the decline last month as we dropped into it. We were eyeing that decline as it dropped into it into the start of last week, essentially. We dropped right into both those zones held, and here's the rebound. The 50% retracement right here at 89.67 held on Friday or on Thursday of last week. Here's the pullback back into support. So this sort of channel that we've been following, null and void, right? We've both broken the lows. Whoops. This is now support. This is now resistance. This is the breakout. Actually, let me amend that. This extension is done. That's still the breakout. Okay, so oil is at support. Let me take a step back. I don't know why I skipped the weekly chart. This is pretty much the most important chart on oil right now is this, period. If you're going to trade oil and you don't want to get into the nitty gritty and you're looking for long term, this is the only chart you've been able to use, or you could have used effectively, just to get in broader swing trades for oil. We are at a massive inflection range, any way you slice it. Okay, you got the 2018 low week close from August, nice symmetry there. You got the highs from 2019. You got the highs from 2020. You got the opening range high for 2021 before the breakout in May. We're right there at support again. And even though we've broken this seemingly uptrend, lateral support, we're there. Now, if this breaks, 100% extension to put this in a corrective path would give you a drop towards 62. Not necessarily what I'm sort of poised for, but that's the risk if this support buckles. We've been checking this now since July, guys. This is the third weekly attempt. Pay attention this week. If we close below that key region, essentially 66.16, it's pretty risky for a drop towards 62 to complete that correction. Now, from the near term, again, it's pretty rangy, right? Here's what the daily chart looks like. The monthly open, again, the uptrend that we've been following looked like it held last month, looks like it broke, and then we got this messy price action. So I wouldn't want to stress this right now, okay? Right now, the focus is on this key low that we continue to drive in. Momentum holding, it's not divergence per se, but right at that 40 level. This is critical. This is critical. Watch this key range. Intraday, it looks like this. So again, 2019 high, 2019 high, we close. There's that key range of support. We're there. We're there. Watch this. Okay, the downside is definitely in trouble while above 66. If you buckle, like I said, 62 is not outside the realm of possibility. But we're at support. We're at support. I can't short into support. And if you're not holding shorts, there's nothing to do here already. Now, if you're thinking to yourself, Mike, well, what if it bases here? Would there be an opportunity to get long? There's two opportunities of which I would look to get long. It's either another reaction in the likeness of this, where you get a stretch. Even something like this, actually, if it would have happened a little bit lower, would be a decent short, a decent position to fade that low. So at least you have a swing low to trade against. Or if we were to get, for example, a break of the weekly opening range highs, you put a stop against that low and you look to play the upside. It's either that or the break of the highs. Because of the lows that we've made here, if we do strike that low and we break this swing high, this would actually be a double bottom formation that would give you a measured move. But that doesn't happen unless we break 69, 67 anyway. So again, a little bit more of a wait and see approach here. If you're not holding positions, we're at major support in crude. Watch out. Short side's at risk into 66. Now, one caveat I'll throw on here, guys, is if the dollar rips, right? If the dollar index just massacres resistance, right? Here's the resistance level. Remember, 93 is big zone. If we rip through this, that could put the damper on crude to get you the downside break of that key support. Not going to work with a corollary approach per se, a tit for tat, but certainly the risk would be there if the dollar does sort of take a leg higher here. So absolutely critical inflection zone of support for crude. Keep your eyes on that 66. That 65, 62 level, 66, 57 level. Okay, that is oil. Last but not least, not really much to say, is just your good old Bitcoin update. I've been talking about this with you guys every session. 46.7 was sort of my line in the sand. I wanted to see resistance hold here. The last 6, what is this? 1, 2, 3, 4, 5, 6, it's like almost 8 days. We've just been straddling it. A little bit above, a little bit below. Jay, I believe it was you last week that was asking, Mike, why are we still using log on this? If you take the log off, it's actually at trend resistance. Look at this now. Still straddling that 46. Anyway, you slice it, I still have Bitcoin at resistance, okay? I still have Bitcoin at resistance. Now, that's not to say it's not going to break, but the breakout hasn't materialized yet. You know what I mean? Yeah, we broke downtrend resistance. Cool. Well, you've gotten that play, but lateral resistance, the parallel we've been working with from 2018, still a lot's basically another few days before you start to break this completely. So it still could be on point. And the way I use to metric that, guys, is, you know, the lows have been a little bit off from the correlation, right, or from the parallel. So you give yourself a couple of bit of an allowance, right? We should have basically marked the high here on the 13th, couple of days. Again, these things are never tit for tat. So still think the top side is exhausted. You're seeing ongoing divergence on the daily chart. I'm not going to be the guy telling people to short per se, but I think the long side is still at risk on the imminent front. Key support, okay, and actually an opportunity of which you might actually get a decent entry if you get a pullback towards 42,000, 42,400. You got the monthly open there. You got slope support there. You got the 38.2 of the decline off the yearly highs. You've got the 618 of the 2021 range. So it's been a very, very consistent, decent pivot in price. That's key support for Bitcoin in the days ahead. Okay. Another one where if the dollar does get some traction, you could see some downside here. What are the geopolitical risks as it pertains to Bitcoin? I don't know if I'd necessarily make that kind of stretch. You know what I mean? I would reinforce that it is still a quintessential sentiment trade. So if we do see broader sentiment turn aggressively, you could find this heavy in Bitcoin. You know, I want to take a quick note here. There's a lot of times where you hear people come on, whether it's CNBC or Reuters or Bloomberg, and they're saying, well, you know, people are using Bitcoin as a store of wealth. That very well may be true, but for those who are arguing that the Bitcoin is the haven trade, I just don't see it, right? It's not the gold trade. It's not if people are worried about inflation or about a market turn that they'll necessarily buy Bitcoin. I'm sure there are guys who are doing that, but price is not telling us that, guys. Price is not telling us that. And again, you could look at the gold trade and just pull a corollary right here. Look at the move we just saw in gold, right? Didn't really see that materialize in Bitcoin. Look at what's happening on the SPX. The stretch, getting kind of tired up here. Bitcoin, the stretch, getting kind of tired up here. So it's more so right now moving with risk than as a haven play. So just be careful. You know, whenever I see guys on TV like throwing reckless comments like that, you know, people are going to take those comments and run with it and base a trade idea off it, and they're just leading people astray. It's not right. Okay. Just watch price action. We are at uptrend resistance on building divergence. It is a constructive trade above 42,000, but the long side may be waning here. Don't really have a very hard intraday chart on this, but I did want to show you that slope even here on the pitchfork we've been following off the lows from June and August and July, excuse me, the upper parallel, resistance, resistance on building divergence. Again, pullback, initial support in your 43s. You got the median line. You got those lows from last week to 43.7. Key support and bullish invalidation. Area of interest for entry if we got it. On the long side, again, 51,000 is the next major level on the upside. So here and here. Jay says, you are always right. Cheers, Jay. Hey, man, I really appreciate your input. I always do, because, you know, me and Jamie, we're in this knee deep all day long, and sometimes, you know, a third eye can just catch something we didn't catch. So cheers, mate. Always good to have you in the room, Jay. All right, well, that's everything I've got on my list, guys. I know some of the trades have been super boring. Some of them kind of just surge and you miss the entry. If you're still flat or if you've missed some of these positions, chill out. Lots of opportunities are coming. Market volatility, I think, is going to be on the way up. I mean, a lot of people yesterday looked at the VIX and they're already saying, oh my gosh, it gapped higher. This must be the low. Chill out. Again, these things tend to stoke more emotional headlines than actually constructive headlines that you would use in trading, guys. So just, you know, make sure you keep the powder dry. All right. Well, if there are no other questions, we'll go ahead and wrap it up there. Jay says, you guys always very good job. Thanks always. Hey, Jay, same to you. Good to see you in the room as always. Eman, Steve, everyone in the room. Best of luck trading. Stay nimble, okay? We're getting to FOMC minutes tomorrow. I don't think you're going to get much out of that, but the dollar is certainly poised, okay? And the break that you're seeing to the upside is certainly now approaching 93, which has been our line in the sand. So we're looking for inflection in the DXY just higher this week. Best of luck trading, guys. I'll see you all on Thursday morning. Till then, happy trading. Cheers.